Hi guys, welcome to Talking Money with Nozi, personal finance made simple. Many investors don't analyze or check the financials of companies and they choose based only on the goods and services that companies offer, or they choose based on FOMO or feeling rather than financial facts and data that would help them to choose better. If you are a long-term investor, you should check the financials of companies that you're interested in so that you can avoid investing in dead or dying companies and putting your money at risk unnecessarily. The reason why people don't check the financials of companies is that they don't know how to read financial statements. For most people, financial statements are intimidating because they are full of numbers and strange words. Well, I have good news for you. Financial statements are not that complicated or intimidating at all. You just need to understand a few basics and things will be a lot easier and clearer for you. In this video, I will explain how to use an app called investing.com to go through the basic sections and items in a balance sheet, income statement, and cash flow statement for a company called Kumba Iron Ore. So let's get started. Okay, so first what you need to do is to install the investing.com app onto your phone. Download this from your Play Store or from your iStore. Let me log in. There are ads. This is what happens when you use free things. Okay, so there's the paid for version of this app and the free version. Obviously, I'm on the free version, so there are lots of ads. Okay, you can just close the ads. This app has got a lot of information. I haven't learned all of the app. At the bottom of the app where it says markets, that's where you see the stocks and everything. If you click on news, this is where you'll see the news about crypto, about stocks, about businesses and stuff like that. Oil prices, as you can see. There's calendars. I actually set myself up a dividend calendar and it shows companies that are paying dividends this week and next week. You can create your own watch list to monitor certain companies that you're interested in. Okay, but let's go back to markets and click on stocks. That's where we want to be. And today I want to show you the financials for Kumba Iron Ore. I just found it was easier to analyze. Okay, let me search for it. Kumba. Oh, there it is. So there's Kumba. And when you click on it, you'll see there's overview. And basically this graph was showing the performance of the stock since 2008. You can see up and downs and stuff. Technical, for those who do technical analysis. There's a news tab again, profile. Basically, this is a summary of the company, like what sector it's in, what industry, how many employees. You can see that Kumba Iron Ore employs 6,107 people, the address of the head office, the executives, their names, historical data, financials. This is where I will focus for today. So what you see with financials right at the top is the income statement. And there's the bar chart or the bar graph. And what you see there is quarterly. I actually want to see the annual income statement. So you click on annual, and what you see there is the blue bars are for total revenue and the gray bars are for net income. So what is total revenue? Total revenue is the total amount of money made through the sale of goods or services related to the company's main business. So Kumba Iron Ore has generated this revenue shown in the graph. And it's showing us from 2017 right up to 2020, 4 years ago, right? So you can see that just by looking at the graph, the bars are growing taller and taller each year. Well, except for 2018, you can see that the height of the graph for 2018 is slightly lower than 2017. But generally, the trend is going up. So 2017, 2018, 2019, 2020, total revenue has been increasing on average. Just like for individuals, net income is the amount you earn after subtracting taxes and other deductions from your gross income. So when it comes to a company, the net income is calculated as the revenue minus cost of making and selling goods and other applicable expenses. So it is an indicator of a business's profitability. Net income should be positive. You do not want negative net income. And again, you can see from 2017 right up to 2020, on average, the net income increased, even though there was a slight dip in 2018, as you can see there. Then moving along, the numbers now that you see at the bottom, those are the actual figures for the total revenue as well as the net income. So if you scroll to the right, you see it's starting from 2017 right up to 2020. So you can actually see those figures. And by the way, these figures are in billions. Hey, yeah, companies have money, guys. All right, so in 2017, total revenue was 46,379 million. The net income, which is at the bottom there, was 12,335 million. Then in 2018, the total revenue was 45,725 million, and the net income was 9,615 million. So there was that dip. But then, good news is it increased. In 2019, total revenue was 64,284 million, and the net income was 16,259. And finally, 2020, big jump, 80,104 million was the total revenue. Net income was 22,779. So if you were to take the average, on average, Kumba is increasing its revenue over the years as well as its net income. So this is a very good sign. When it comes to the next figures that you see there, gross margin, operating margin, net profit margin, TTM. TTM stands for trailing 12 months. So these are ratios that are calculated using the last 12 months data. So when it comes to these ratios, the higher the percentages, the better. So gross margin is 87%, operating margin 60%, net profit margin 44%, return on investment 80%. These are excellent figures. Next, we move on to the balance sheet. Again, I'm going to click annual because I want to see what's going on over the years. Are they increasing or decreasing their assets? So the balance sheet shows you assets versus liabilities. So total assets refers to the sum of all assets owned by the company, whereas total liabilities refers to what the company owes. So you want a company that has got more assets than liabilities, just like an individual. You don't want too much debt, right? You want to be owning more stuff than you owe. Same applies to a company. As you can see, total assets has been increasing for Kumba. The height of those bars is increasing over the years. Total liabilities has also been growing over the years, although the ideal, right, is to decrease your liabilities. But Kumba has a lot of assets compared to its liabilities that it's not in danger. And as we go down, these are the actual values. This table, just like the one we saw before for the income statement, this is the balance sheet. It's showing total assets from 2017 right up to 2020, as well as the liabilities and the total equity. So total equity is calculated by minusing total liabilities from total assets. And you want your total equity to be positive. It must be a positive number and it must be growing over the years. So as you can see, total equity from 2017, 34,769. That doesn't say anything in isolation, right? That's why you compare with subsequent years. Then the numbers start to make sense. So now we look at 2018, total equity was 35,260. So that's an increase. 2019, total equity was 36,230. That's another increase. 2020, total equity was 47,446. This is very good. They are increasing their total equity. Let's speak about the ratios, although I won't deal with all of them. Let's tackle what MRQ means. You can see all of those ratios have MRQ. MRQ means most recent quarter. So these ratios are actually for the past quarter. Okay, so let's talk about the quick ratio. The quick ratio indicates the ability of a business to pay its current liabilities without having to sell its assets or to get into debt, like asking for finance from a bank. A quick ratio higher than 1 means that the company owns more assets than liabilities and is in a good position. The next one that I'll talk about is the total debt to equity ratio. The debt to equity ratio measures a company's debt compared to the value of its net assets. It is used to measure how much a company relies on debt, basically. A high debt to equity ratio is associated with high risk because it means that a company is borrowing aggressively. They've got too much debt. A low debt to equity ratio is good. So you can see there 0.74%. That's very good. The company is not heavily reliant on debt. Next, we move on to the cash flow statement. The cash flow statement basically bridges the gap between the income statement and the balance sheet by showing how much cash has come in or gone out for a specific period. And the cash flow statement, as you see from the numbers there, is split into 3 sections. There is cash from operating activities, cash from investing activities, cash from financing activities, and then there's net change in cash. So let's deal with the first one, which is cash from operating activities. This is the cash coming in from customers paying the company minus the cash going out of the company to buy materials from suppliers, minus the cash going out to pay employee salaries, minus the cash going towards government taxes. For most companies in good health, the cash from operating activities is a net cash inflow, which is a positive number. And this is what you're seeing for Kumba Iron Ore. So you can see that from 2019, this time it's in months. 2019 December, we had a positive cash from operating activities. Same thing for June 2020, same thing December 2020, and for June 2021. Let's talk about cash from investing activities. Investing activities include any sources and uses of cash from a company's investments. Examples of cash flows from investing activities include purchasing an asset like property. That would result in a negative cash flow. Purchasing investments like stocks would also result in negative cash flow. There could also be lending money that also results in negative cash flow. Or you could sell an asset that would result in positive cash flow. Or you could sell your stocks, for example. That would result in positive cash flow. Or you could collect loans or get an insurance payout. That would be cash flow positive. So cash from investing activities is usually negative for most companies, right? Because sometimes they buy a lot of assets. And so that's a lot of money going out and therefore resulting in negative cash flow. What about cash from financing activities? This shows the net cash flows involved in funding the company's operation. This can go either way. It can be a negative or a positive number. If the company needs money and takes debt to fund itself, then there would be a positive cash inflow. But if the company has a lot of cash, but it doesn't have any plans to put that cash into any use, then the company can choose to pay dividends to shareholders. This would be a cash outflow, so it would be a negative number. What's important is the net change in cash. This number at the bottom, that one should be positive because cash is king and cash is important at every stage of a company's life cycle. If a company runs out of cash to pay its bills, it can't operate, it can't run, and it's game over. So guys, that's it. This is how you go through a company's financials. You go through the balance sheet, you go through the income statement, you go through the cash flow, and it starts to paint a picture about that particular company. And from there, You are in a position now to say, is this a company that I can invest in for the long term? That's it, guys. Simple, wasn't it? I took you through the income statement, the balance sheet, and the cash flow statement. If you understand these three, you will have a good idea of what's going on in a company before you decide to buy it. I recommend that you download the investing.com app onto your phone and go through this exercise for different companies and see if you can understand the financials. If you like this video and would like to see more of my content, please hit the thumbs up button so that you let me know. Also, if you are looking for something to watch next, check out my video titled How to Choose Shares. If you are new to investing and would like guidance on how to start investing and how to choose good companies, I wrote ebooks starting at just 50 Rand each. See the description below for my contact details. As always, please subscribe to my channel for more videos, and thank you so much for watching. Bye guys.